has this company that sells widgets, and he sold it for, I don't actually know if that's probably, is that a real number?
It is a real number. It's correct.
Wow, right, of course. If their stock drops on the news, it will, but it will only go up. So it's $170 million.
Just cash deal. It doesn't matter if their stock does.
No, my friend, it does matter what their stock does.
Right.
It doesn't matter to you what their stock does. There are many people in the world who actually it does matter. So, without further ado, one of the, if not the best speaker from the Founder Institute, Aaron Patzer, Mint.com, rocked the house. Congratulations. And I was like, dude, why haven't you written me back to say if you're going to speak? He's like, fine, I'll speak. Next morning, 170. I was like, ooh. All right, so welcome to the stage. Warm round of applause. Aaron Patzer.
Thanks for having me. I have no idea how I have a reputation for being the best speaker in the Institute, because my talk is on accounting. It's like the most boring subject out there. It's very dry. It's very numbers-oriented. I'm not going to tell you a lot of theory and big diagrams that have 4 quadrants of where you should be in and where you shouldn't be out, what's Silicon Valley and what's Death Valley. It's going to be exactly what you should pay people at each stage of the company and what you need to prove in each stage of the company to make it to the next stage, because that's real practical information that you need going forward if you're in the garage stage, if you're in the seed stage of your company. When should you bring on co-founders? How much should you pay them? What do you pay an engineer? How much equity do you give to people? How much can you expect to spend? How much runway do you have before you get to the next stage? So I like to do things sequentially, and I'll tell you this from the perspective of Mint. I'll go through the Mint finances, and I even have pages from the original Mint business plans in here. And so the first phase we'll talk about is what I call the garage phase, which is under $100,000 in funding. This is the amount of money that you can either spend in terms of credit card debt, your own savings, borrowing from friends, your parents, your relatives, whoever. Then you move into the seed stage. That's under $1 million in funding. What's the business goal there? What kind of expenses can you expect? How do you project revenue? And then funded is once you've got over $1 million. Obviously, you're not set, but most of you in this room are, well, I would love to have $1 million. How do I get to that point? Okay. Just for background, I never assume that the audience knows who I am. So I'm the founder and CEO of Mint.com. It's a thing that you can use to manage your personal finances. It works all right. It's the top personal finance application on the web today. And a little background on me. That's me when I was 6 years old. I am an engineer by training and a bit of a geek. I used to try to sell my designs for Legos and Constructs back to the companies. And then that's me in a Fortune photo shoot. It's really weird to be an engineer and then go on a 7-hour photo shoot. It's just unnatural. And in some sense, it's unnatural to be speaking to a room of people, although I've done it a couple of times now. And so at the end of the talk, I want to talk about how starting a company actually transforms you as a person, not just the money aspect, but transforms you as a person. So I have a computer science, electrical engineering background, and because of that, I tend to speak down to business people, marketing people, not think too much of them. So with that as a lead-in, when you are in the garage stage of your business, your goal is to build a prototype. And you might wonder, how do venture capitalists, how do angel investors value a company that really has no product, thank you, and no revenue yet? And the rule of thumb around the valley is you add $500,000 for every engineer, every geek, every guy in glasses, every guy who can't get a date. He's worth $500,000. And the sharp-looking guy or girl that's well-dressed and can speak, you subtract money for those people. They just waste a lot. Because the truth is, in the very beginning, when you're starting your company, you need to build. You need product people. You need engineers. You need people who can write code. There are a lot of business students who come up to me, because I speak sometimes at business schools, and they'll say, I've got this great idea, and I figure I could really just outsource that. I could use Odesk, I could get some people in India to do it, I could just contract that out, no big deal. Dead wrong. The difference between a good engineer and a great engineer is tenfold in difference. And those are the people who are far more valuable than the idea people. Ideas are a dime a dozen. It's the execution that matters. And it's the engineers who will be building for the first 6 months, the first year, and the business people will be relatively idle. They'll do some market research, they'll go out and raise funds, but relatively idle, and that leads to a lot of conflicts between founders, actually. You often have the business person with the engineer, the two-founder combination. Mint is just me. I tried to take both those roles. And there's a lot of tension in the beginning, so just watch out for that. What can you expect? These are sort of actual expenses from my time at Mint. I put about $50,000 of my own money. I'd saved that up as a programmer. And I lived on less than $30,000 a year here in Silicon Valley. A lot of people say that can't be done. I still ate steak. I still had a decent place. I had a roommate. Went on vacation a little bit. But you can do it. If you have a roommate, if you cut back on your big discretionary expenses. I won't tell you which tool to use for budgeting. That seems self-serving. The first engineering hires that I had, there's a guy, Matt, who's a first engineer still at Mint, and he was making about $1,000 a month working for 3 startups, sleeping on a cot in a friend's apartment at Stanford. So I said, all right, you're a fantastic programmer. I'm going to triple your salary. I'm going to pay you $3,000 a month. So $36,000 a year is what I started off paying him. And that's what I paid my second engineer as well. But Matt got about 2% equity at the time, and after dilution, let's just say that's worth quite a lot right now. The second engineer that I hired got paid about 1.5%. Now, at this point, I had worked basically alone in a room and built an alpha prototype of Mint myself, and was starting to actually talk to investors, and we didn't have funding yet, but I was self-financing. If you're at the idea stage, if you're in the first couple of months and you need a co-founder, if you need a technical co-founder specifically, expect to give up half the company, expect to make an equal partnership. If you're 3, 4, 5 months in, and you don't have that skill set, you may need to give up, say, 10% of your company. If you're bringing in, you shouldn't bring in a CEO at that time, you should be the CEO. But those people will take 20% at this stage. So if you're bringing in, like at a VP level at this stage, don't be surprised if it's anywhere from 5 to 10%. Okay. Offices, we rented by the cube. It's about $400 per cube per month. I give you specifics because you may not know. We spent about $10,000 on tech. And one of the great things about Silicon Valley is we didn't pay anything for legal. We just went to, actually it was Wilson Sonsini, who I guess is a sponsor here, and said, this is a great idea. Why don't you defer our legal costs until we raise our first real round of financing. We deferred up to $25,000 in legal expenses. And I think we gave them 0.5% for that. It might be a little bit less, but sort of the market rate is you don't spend more than 0.75%. And you can get away with less if you're somewhat developed. So if you add all those up, it's about $150K a year in burn if you've got one technical and one business sort of co-founder, or two engineers, maybe 3. And so you're going to need to raise seed funding within, say, 6 to 9 months. The goal of your seed funding would be an alpha launch, to put it in front of users, real people. It doesn't have to be millions of people. It doesn't have to scale, but you put it in front of a couple hundred, a couple thousand users. And it should be usable, but not necessarily polished. This is what Mint looked like. This was the UI that I originally designed. For those of you who are Mint users, this is Mint circa about 2.5 years ago, before we launched. When you are in your alpha stage, you want a headcount of about 5 or 6 people. You want 3 or 4 of those people to be engineers. You probably want one front-end person who doubles as your graphic designer, does HTML, CSS, that sort of skill set. And you want one business generalist. And this person ought to do marketing and sales if you have it. They ought to be the person who's raising the funds. They ought to be keeping your books. They ought to be doing purchasing. They ought to be doing recruiting. They should be doing everything else. And if you have someone who says, okay, but I only do marketing, don't hire them, not at this point. So at this time, we'd raised $750,000 from first-round capital, a number of angels in the Valley. And for salaries, I was paying myself about $50,000 a year at this point. And then I hired my VP of engineering, who was making about $180,000 all in. And I hired him for $90,000. But I gave him about 4% equity. Overhead, you need to consider the cost of facilities. At this point, you pay benefits and taxes and a bunch of other stuff. In the garage phase, I just kind of ignored that stuff. I mean, you could probably be fined for that. It's probably illegal, but nobody's going to come after you. Just ignore that and clean it up once you get money. That's what I did, right? Off the record. I've got IRS agents who are coming to the building as we speak. And then do not underestimate legal costs. Because one thing that VCs do not tell you is when you take $750,000, it'll cost you about $25,000, $30,000 from your own legal counsel. And then they give you the bill for their legal counsel. And they always put a cap on that legal bill. It's usually in the seed round or the A round, it's about $30,000, $40,000. And somehow the lawyers always bill you exactly $30,000. Exactly. And so you think that you raised $750,000, but actually you raised about $690,000 with the legal fees. And so you be cognizant of that stuff. And so for a 5 or 6 person startup, you're going to burn about $600,000 a year, which means you really need to raise your Series A in no more than about 12 months. You've got about a year's worth of runway. Okay. Now, when you're in the seed stage, they're going to ask you for your revenue projections. And they're going to be total bullshit, because everyone does. Everybody says that they're going to get to, that they're playing in a $26 billion market or whatever it may be, and that you're going to get to $50 million from a cold start in 3 years flat. They actually did some research on this, and they found that the big public companies that you would know of, maybe Google reached a little bit faster, but whether it's Intuit or Facebook or whoever, on average they take 6 or 7 years to get to about $50 million in revenue. And maybe inflation adjusted, that's 5 years now, but it's not going to be. Probably not. What really matters most is a huge market opportunity, and what are you going to make per user or per client or per transaction? If you can prove that it's a big market and you make a lot per transaction or per user, then people will both understand the business model and they'll know that the revenues aren't going to come this fast, but they have the potential to come. And so these are Mint's actual slides from 2006. And so this was defining the market, and I said, okay, there's Quicken and there's Microsoft Money. Difficult to use, they cost money, 4 to 5 people quit, but 20 million people use Quicken and Microsoft Money. And then you have Lower My Bills, Uswitch. Mint's business models, we find you better interest rates on all your financial products, better prices on the things that you buy most, but without you having to search for it. And online banking is 65 million people, so that's the market size. And then we said, all right, people will switch their credit cards maybe every 2 years. We can make about $60 off of that. They'll do a brokerage just once. They'll switch brokerages just once in a lifetime. That's about $200. And then we said, how many people will adopt that? Only half of users, we think, would invest in half stocks. So what's our goal revenue per user per year? Those numbers that we projected 3 years ago are almost identically what we've got. Some of them are plus or minus, say, 40%, but they're not, 10x off. If we're higher on credit scores and investment than we suspected, and lower right now on checking and savings accounts because of the interest rate environment. But simply by having this model and walking people through what the assumptions were, then they say, holy crap, you can make $30 per user per year off the free product. And so then we said, okay, 20 million people using Quicken Money, 65 million people using online banking. It's about 84 million people now. $30 revenue per user per year, we got $1 billion opportunity. And you've walked them through in a very linear fashion how people go from your site to taking a particular action, particular transaction, how often they're going to take that, what you're going to make from it. And from that, people know exactly how you need to execute in the business. There are no gaps. It's very linear. As an engineer, that's the way I think. So that's the way I present. Okay. Now, once you've got your seed funding, the goal is obviously to launch a real product, grow up a profitable business. And you've got a lot of hidden expenses when that happens. So you've got patents, trademarks, contracts, and I'll speak to the slide. Every month, I think, okay, Mint spends about $400,000 in headcount. And we've got this amount in cost of goods sold. And then there are these one-time expenses. One month it's your patent fees. One month it's financing legal fees. Another month it's consultants. Another month it's servers and that kind of equipment. And so even though they're one-time expenses, every month I swear it's $150,000 to $200,000, pretty much dead even every month in one-time expenses. And so you need to account for that. And so even if you're not paying your people $200,000 a year, you account for about $200,000 a year in salaries and overhead. And that includes all the taxes and benefits, and everything is rolled into that. And at this point, when you have, say, 30 people, like Mint does, we have about 35 now, you spend about $50K a month in legal fees. And so you burn about $6 million a year. And a typical, say, it's probably a B round, you'll raise somewhere from 6 to 10 million. So you've got a little over a year's worth of runway, maybe up to 2 years. Because you won't hire the 30 people all immediately. So you want to be profitable within 2 years, or at least not burning too much. Okay. The thing that you need to do in order to figure out when you need to raise funding and when you become profitable is you need to build a simple model. And this is the sort of model that we run Mint off of. It's really only just a few items, and it measures what's our customer growth, how many of them actually stay active, and then from that we derive revenue, cost of goods sold, and we have our headcount costs, and we show how much that's increasing, and that should not be a hockey stick. That should be sort of plateauing after a while, or at least growing linearly. And then you see when the curves switch, and you can model your P&L that way. And what I do is just a linear regression back test to make sure that it's accurate. And we spend about $20,000 per employee per month, sort of all-in expenses minus the cost of goods sold. Just for reference, just for those of you who like modeling, that's the actual number. So to be very transparent about it. So those are all the things that you need to do from a modeling perspective to launch your business. Those are the things at each stage that you need to prove. So you need to build a prototype in the garage phase. You need to build a working alpha and get it out in front of real users in the seed stage. And obviously you need to launch your company. And so since Mint has recently exited, that is sort of the last stage in a company's life cycle, economically speaking. So I wanted to speak a bit about that. So being acquired is more than just the cash. And I kind of wanted to take a personal moment here on stage and say that the most, especially to all of you out there who want to start companies and have that ambition, what it really does beyond what it can do for you economically is something on a very personal level, something that's incredibly gratifying. And to me, I started out 3 years ago as a very introverted, kind of nerdy engineer, didn't date a lot, Now I can pick up women, no problem. As an odd aside, I actually have the same taste in women as Mike Arrington. And we won't get into the overlaps, but yeah, you know it's true, Mike. And so it's been something that's transformative to me in just building, rock solid self-confidence in sort of who I am, and not being introverted, and not being the guy who sits in a room and codes all the time, which is gratifying. But in becoming more and in learning the skill sets that it takes to run an entire business, and learning marketing, and learning sales and business development, and learning how to recruit and how to deal with people and tricky management issues, regardless of whether you ultimately win or lose, that's something that can never ever be taken away from you. And so, the last thing that's just really gratifying is to create something from nothing. I mean, it's the essence of human progress. Everything that you see around you, everything from the time that we lived in caves, all the buildings and all the equipment that you see around you, it came from up here and the actions that made it real. And so 3.5 years ago, Mint was just an idea in my head, and now we've saved people $300 million and affected thousands of lives. Dozens of people write in every day. We track $200 billion in transactions flowing through the Mint system that we see, and $60 billion in assets and investments. And it just transforms people's lives, and it was just an idea. It was just something that I thought 3.5 years ago when I was 25, I thought, who am I? Who am I to take on Microsoft and Intuit? This is never going to work. I had all the self-doubt in the world, but you push through. And now here I am today, speaking in front of a great audience of people who want to do exactly that. And Intuit, the company that I thought that I could never beat, just bought the company for a boatload of money, and I'm going to be running their whole personal finance division. And how cool is that? It's possible, it's real, and it's the most transformative thing that can happen to you in your life. So I highly recommend it, and I hope you stick with it.